Hey y'all, it's the Investor Professor here with your weekly update. Whew! Wall Street took a hit this week, right? The reason, they pitched to a lot of sell-offs, particularly in tech, but a lot of sell-offs, and, overall lack of investor confidence in this recent news regarding the tariffs. Now, today is the 2nd. And so we should be hearing from Trumpito. He said, I think they said 4 o'clock Eastern Standard Time. So we will be hearing something. Knowing him, who knows, right? But yes, there's been a gigantic sell-off in Wall Street. They said trillions of dollars and a lot of overall loss in terms of value, and stock evaluations are down, right? Because, as you know, things are projected out for years and quarters. So people who, and companies that have projected such and such earnings before Trump, they baked in some amount of resistance, right? Because he always talked about these tariffs, but they may not have baked in the major stock falls that we have been experiencing. On another note, so what that means is that they have some of this reduction baked in, but not all of it. But what I was going to say is that if you guys looked at the market today, which I'll show you right now, this is about, sorry, I work in multiple time zones. So this is about 2:45 Eastern Standard Time. This is where the market is at. And it's up today, right? What a basket of mixed emotions and mixed signals. Another thing, I also heard that Tesla, even though Tesla's down and all this boohoo Tesla's actually up more than it was last year. That's one thing. That's why I always talk about my videos. Keep to your track and your trajectory, because these news be up. All right, so here's the deal. The most wealthy pulled their money out. And stocks are undervalued now, right? But it's okay. And for the long-term investor, the intelligent investor that we are, it is okay. Because when these wealthy people, and they're doing sell-offs, they are selling stocks at a loss. That's something that me and you cannot afford to do. So be mindful, right? Be mindful when you hear this stock news that is absolutely relative. And this is from the book, The Psychology of Money. That when they're reporting on things, the stock market is doing all these sell-offs, that may not and is not, I'll tell you that right now, if you're watching me on this phone, is not pertinent to you and your investment goals. So don't worry about it. If I have millions of dollars in the stock market and I know that I can sell off in the red and have my CPA write that sell-off as a deduction in my taxes, I'm in a whole different ballgame. I have a whole different set of feelings and emotions about when the market is down. All right, so what's your move? What's you and I? What are we gonna do? We are gonna diversify, which means you're gonna spread your investments across different sectors to reduce your risk and safeguard your funds. So diversifying into bonds, maybe into real estate assets, maybe just diversifying within the sectors. Remember, we talked about sectors that are very recession proof, the consumer staples, energy, utilities, real estate. Those are things you want to think about diversifying away from tech, away from that sort of technology stocks right now, and into some, insurance is another good sector, into more sturdy sectors. Secondly, doing your stock analysis. And this is, even about the portfolio management that we talked about yesterday. Doing the stock analysis, putting up one stock and another stock. I'll try to show you a video, and actually digging into these companies' balance sheets. And what did they do last time the market, quote unquote, crashed? So remember, buy counterbalancing sector stocks to hedge against losses. Right now, it's about protecting yourself and staying strategic. It's about strategy and discipline. Follow me for more tips, more market analysis, and more market education. Investor Professor 25. Do not be fooled by the fakes. Investor Professor 25. Follow me on Instagram, YouTube, and the website, theinvestorprofessor.com.